Hello, let's talk about something fantastic. It's a new model. Well, it's actually an old model, but let's say wait, let me show you. Hi. Something very exciting for you. Hey, there's music. Wait, why is there music here? No music, please. Done. Okay, sorry. So I have something crazy for you today. I mean, it's an old model. Everybody uses it. Everybody knows that when the hourly chart wicks a candle and reverses and closes above the previous one, then it's a big bullish sign. That's not news. What's news is that I've ran the numbers. I built a statistical analysis with Python and OpenAI and AI tools to double check if that's true, if there's an edge to this specific model. And then I built an indicator to know when it's happening and analyzed dozens and dozens and dozens of cases. So it can be in my toolbox of models and setups that have high probability. That's what I'll show you. So let's go. Okay, let me reduce the camera. I know you love to see me, but maybe my face will be smaller. Give me a second. Click. There you go. Smaller face, maybe to the right side. All right, that's good. Okay, what is an engulfing candle? And okay, there's a ton of definitions. There is tons of definitions and many subtleties, and people use it in a different way. Recently, watching some videos on YouTube, I did see one definition of engulfing candle that's a little bit more relaxed and allows for a little bit, broader use, because not all candles close above the wick of the previous one. Well, we'll see. So what is an engulfing candle in this specific scenario? And I'm only talking about hourly candles. So you have a candle that can be a bullish candle, can be a bearish candle. It does not matter. Imagine there's a bearish candle that opens, creates the high, the low, and then closes. And then the new candle, which is the... Hey, wait. Sorry. Now you can see me. Okay. So there's a bearish candle that opens, makes the high, makes the low, and then closes. And then the engulfing candle opens, creates the low, and sweeps the wick of the previous H1 candle, goes up and closes above, in this case, the open, because it's a bearish candle, but could be the close if this would be a bullish candle, closes above. And this engulfs, let's say, that's the definition, the previous candle. So this is the engulfed candle. This is the engulfing candle. Now, what do we expect for the next candle after the one that's done the engulfing? We expect that it opens, it does a certain degree of manipulation or retracement into the body of the previous candle. Sometimes this will come down very low. So that's where the danger lies in this model. And then expand. And it will expand, generally reaching for some objective on the left of the chart. And you can do some projections and sort of statistically calculate where most of the expansion will reach for. Now I put in two levels like 50% and 100% of the length of the engulfed candle from this open. So this is how I calculated the statistics that I'll show you. Now, why was I very excited about this model? Well, first because hourly candles do this a lot. And I ran the numbers to see when a candle does close above, in this case, the open of the previous one, or, for a bullish scenario, for a bearish engulfed candle, how many times will this happen, that we will move in the lower time frame? How many times will it happen that we will hit this level? First, how many times will it happen that we will hit the high? How many times will it happen that we will hit the high probability target? This is high probability target. Sometimes we even close above it. So how many times we'll do this? And how many times, once we hit the high here, how many times will we expand to the statistically relevant targets that are some projections based on this, on the length of this? Now, the answer is that's a crazy high probability that from the open we breach the high of this candle if it hasn't been already. And there's very high probabilities that we'll reach above a certain percentage above this candle. So this wick and close above is very strong. It's a very strong price signature. It's nothing crazy. Everybody has spoken about this. ICT speaks about this. The price action guys speak about this. Everybody has a model about the wicks and the liquidity taking of hourly candles. But what I did is run some statistics. So I downloaded hourly candles since 2010 using Data Bento, and let me show you the. Let me show you. No, this is the wrong one. Okay, sorry. Okay. Anyway, let me show you the data. Okay, so I ran some numbers. I tweeted about it. You can go check it on my Twitter account, key_poems. X. Okay, there's some huge numbers. Okay, let me move myself. Okay, sorry. Okay, I sorted them with a combined score. Is how many times will we breach the high probability target of the high of engulfed candle, and also when we expand past the high of the engulfed candle, how many times that candle do we move? The Q1 is a thing that happens 3 out of 4 times. 75% of the times, price will at least touch that level. That's why I thought if you want to go for very high probability of reaching your take profit, let's use the first quantile. Let's not use the median. Though we'll see in a lot of the examples we can reach for the third quantile or the median, and then it's a lot of points, and it's a big R numbers. So I sorted them by which hour actually, when that hour creates an engulfing candle, how probable that it will run. And as you can see, we have a high probability for the 8 to 9. Those are of course volatility injections of the open. So 8 to 9, 9 to 10. Okay, pretty simple. But the thing is, when you see the engulfing, when you see the close at 9 or the close at 9, the 8 to 9 does create an engulfing candle. Well, 9 to 10 creates an engulfing candle. Then you can look for huge retracement because it's a lot of volatility, and then have huge runs. But look, this is what's interesting. It's a very high probability engulfing candle 2 to 3, 1 to 2, 7 to 8. Apparently is after the lunch macro, after the lunch break, 2 to 3, then 3 to 4 actually is also very high percentage, and so on. So this, not all hours have high probability. Lunch break, engulfing candle, not that strong. 11 to 12, not that strong, and the close, not that strong. But in all other cases, when you get this configuration, you have a very high percentage that we will touch the high of the engulfed candle, and it will run by a huge percentage. So I did create some examples. Let me show you. So I have collected a lot of examples. We go through them, but first let's see just one on the chart actually. Right, let's see. So I created an indicator. So yesterday I did a statistical analysis, double checked it, refined it, fixed it, then I got it to print. 1 second, I need to pause now. All right, back. So let's look at one example and the indicator I built, and then we'll scroll around. We'll show you some examples, and then we'll scroll around. Okay. So I already have this. Amazing. 5R for you. There's a lot of this, like a lot of this. At least I think once a day, twice a day, sometimes 5 times a day, these things happen constantly. So this is the candle. The engulfed candle is the 1 a.m. candle, and this is the 2 a.m. candle. So for people trading London, for example. Okay, London, sometimes you want to wait 3 a.m. before entering. And so how you would do it, and if you're lucky that the London setup provides this, it's crazy indication of a possible bias. I forgot to mention something. 1 second. Sorry. Okay, let's go back. Okay, this study I made, the study I just showed you, with all the statistics on our side of how crazy the percentage of completion is and continuation, only works. It only works for bullish engulfing candle. Bearish engulfing candles even works like even opposite. They will just run the other way. And I will actually do a test. Let's see if that's another model in itself. But just want to say, only my test, my indication, unless I made some statistical error and data analysis, which is possible, it's possible. It only works with bullish engulfing candles. So make of that what you will, and it is for hourly candles in this case. Okay, so first example. Let's check it. Okay, here it is. Okay, 1 a.m. candle has this wick and it closes bullish. You cannot take this low. Then the next one opens, wicks the low, H1 sweep, as my indicator says, then expands, and okay, unfortunately, it does close even above the wick, so even stronger bullish definition. So the new candles opens. The new candles opens. We can look at it on the lower time frame. In this case, I have 1 minute. I've been doing a lot of the tests on the 5 minutes. Okay, new candle opens, right? We know there's a very, very high probability that we're going to take. Which high? This high. This is very high probability. Okay. So how high is this probability? How high? We open and we go down. We can take it and we go down. This is high probability. How high is this probability? Let's go check it. This is the engulfing candle of the 2 a.m. Okay. Let me show you. 2 to 3. There is a 91% probability that we will run, and a 75% probability if we run this, 75% probability that we run half the length of the engulfed candle, right? That's pretty good. Pretty good, if you tell me. So you see it fail to take it. So it hasn't taken it. But there is a 90% probability that we will take this, man. There's a 90% probability we'll take this. So what do? You wait. It goes down. Goes down, wicks this level. Manipulation. Wick this. Okay. Then there's a last down close candle gets violated to the upside. It's sort of a change in state of delivery. CSS flip, you call it however you want. You wait. Now there's also a volume imbalance that's created here, right? There's a volume imbalance on 1 minute here, right? So what you do, in general, you want to do wait for the retest of a volume imbalance, or you might want to, because I just saw that because we don't actually touch this candle anymore. So let's say, okay, I enter on this volume imbalance. You wait for the retest, re-week of the volume imbalance, which happens always. Always this happens. If you know, you know. Let me write it for you. This is a volume imbalance. All right. So how big is our stop? Well, we want to protect us fully, and we put our stop 13 points below this week. And now we enter, and we have 90% probability to do 25 points. It's already almost 2R. But we know that once we touch here, there is very high probability to reach 50%. So let me do it like this. If this is the low, right? This is the low, this is the high. We want to do the open, and then want to do projection. And in projection, we want to do this 50%, right? Just let's see what it comes up, just to show you, because the probabilities that I am showing here are generic. Wait, was it? Okay, it shows because it's reverted, and it's reverted. Okay, so we have a very high probability, like you saw, to touch. So 75% of the times we will touch this level, and we're already at 2.7 R. Okay. Then I have some generic levels, which are the projections for the general case, without taking into account if it's 2 a.m., 3 a.m. Just if you aggregate all of it, the projection will be, the Q1 will be this, the median will be this, and the Q3 will be this. So in this case, if you just held strong belief in this trade, you would have 5R. All right, that's the model. Wait for hourly engulfing candle and find a way to enter if there's a manipulation, or enter at the open with a wider stop, profit. That's the model. Now, I did collect a lot of these examples. Let me share some of them already here, analyzed for you. This probably is the one I just showed you, right? No, this was, yeah. This is just using 5-minute candles, so it's the same example that we have here. But I have very many different ones. So here's it. This was like, what's the close? Is it 12? Which one is the engulfing candle? Is it 12 to 13? The 12 a.m. So lunchtime. Lunchtime, as you can see, we wick the previous candle and we close above, but we don't close above the wick. So there is a very high probability that we're going to take at least the high here, which we do, and then we expand. Where do we expand to? Well, Q1, median. In this case, we don't reach. What I want to show you is that even if our bias is wrong, and the launch macro actually wants to fake out a continuation and then reverse, you still can go out with 2-3R trade anyway. Okay, next. Okay, here. This was again a 1 a.m. close, right? So midnight is the engulfed candle, the 1 a.m. candle wicks, closes above really strong. So we wait for the open, slight manipulation to the downside. We protect ourselves below this order block that's been activated and hold until Q3. Okay, let's go on. This also was very interesting, which is, okay, so this was a deep retracement, very deep retracement at 2 a.m. So the 1 a.m. candle gets wicked by the 2 a.m. open, 2 a.m. wicks it, see here, we wick it, and then we close. We close above, in this case, the close of the bullish candle. We close, so we open here. There is a tiny retracement, so we can put the stop below this order block, and if we were very quick on our feet and held until the median, we would have a 2-hour trade. Then we had this crazy deep retracement and price continues. Okay, but this was a consolidation London, and you would still have a profitable trade if you were quick on your feet, or move into break even, or take profit, or move the stop, or move the trade the profit at this level, whatever you might want to do. And sometimes the setup is incredibly clean. So this was Asia, Was it in Asia? And this was an Asia setup, right? So Asia setup before midnight. So what did we do? Wait, what is this? So it's 10 to 11, then 11 to midnight we have so the engulfing candle is the midnight one. We wick below the 11 p.m. candle. We close above. There's also one of those times where we close above, but we haven't reached for the high yet. So this allows us to enter with a very, very, very small stop. We know there's a very high probability we're going to take this high, and then it even runs much further. Okay, this was just some of the examples I tweeted about, but now I have an indicator that does it. So we can go and just roam around randomly in the past and look for the setups, because they are all drawn. That's crazy, and you know, that's what I've been doing. I've been just going around and looking like let me do it. Let's scroll back. Oh, this is one of the ones that this is another one that I reported. I don't know if I tweeted about it. I've been collecting them a lot in a journal in my. So this was the midnight. This was another. It was a 1 a.m. midnight. So 1 a.m. is the engulfing candle. Midnight is the engulfed candle. Let me zoom out to show you. Now, this is the crazy thing, is that we body close really far above, right? And still, we open, come down, but cannot even breach the order block. So in this case, because I think I was on 5 minutes. Yeah, so we did close above here. Created an order. Well, the order block is only valid once we close above here, so this is not proper. But you can protect yourself below the swing. 13-point stop, and it runs like crazy. All right, keep going. Look for other examples. What is 22 minutes? Okay, we just cut the videos very soon. I just look for. There's a lot of these setups. I've looked at a lot of them, and they're all the same. All right, let's see. Oh, this was another one that we could have taken. Okay, so here we haven't even run yet, so we can even. Let me see. Is this a loss? Let's see. So, okay, doji candle, wick the bottom, close above. So this would be. When does it open? This in itself is the previous. This is the previous setup. The new one is even here. So let me go a bit further. Okay, so there were many. I would say this was this down close candle. We wicked here and expanded, and then we expected to run. And here we expected to run, and actually there were 2 moves down. So there's a loss here. Next candle, which is because okay, if you think about it, it's the 1 p.m. So we resume after 2 p.m., which we saw that 2 p.m. was a high probability one. So here, wick 12. The 13, sorry, the 1 p.m. Wick the 1 p.m. Close above. Open the new candle. Come down. Dilly-dallying. And then run. Okay. Let's see. Was this a loss? Let's go look for a loss, right? Let's go look for a loss. So this was the. I did look at it. I don't think it was a loss. Let's check. All right, that's the open. Okay, so this was the 6 a.m. Yeah, so the 6 a.m. I think is a slightly lower probability one, but the 7 a.m. wicks. No, actually 7 a.m. wicks. So we wick and close very strongly above it. Right, so this is the close of the 7 to 8 hour, and let's see if we ran. So we now open high, went down, Let's see when we have changes to the delivery, we might enter. See what happens. I haven't tested this. Okay, so here we would enter. Right? I haven't tested this. I haven't looked at this. Okay, this is a 35-point stop, man. This is like unacceptable. This would be 1.7. We could go down to 1 minute, see if there's something a little bit more palatable. If we can reduce the stop. Nah, it's not right. All right, then let's just hold it. See what happens. See if we get stopped. Let's see. We're struggling to get above here. Let's see. This is oh, we're getting close to the open. I thought 6, 7. Okay, so let's see, pre-open, and we got a loss. Okay, so then as you can see, it's not 100% win rate. This is also very cool. This was a loss also too that I saw, which I thought was very cool because it was a very sneaky signal here. All right, let's see. Okay, there is this crazy weak doji. Still, we weak it and close above. Would you long this? Maybe not. Maybe not. All right, this as a long would not have worked. Okay. Remember, we're only looking for longs. Okay, I'll do the last one. Okay, I'll do one last one. So last one, and then we are done. Okay. This is a close. This is a market close. 6. I don't like. Let's go for another one. This is also one where you might get it and then it reverts on you. Well, let's see. Last one, and then we'll call it. We'll call it. All right. Where is the Fed set up here? Okay, okay, okay. Okay, this is a lot of wicking open. Yeah, this is another loss. Okay, see. So even though, yeah, so it's a barcode on hourly candles. It's, you know, 5 a.m. candle, wicks, closed above. We expected to go down a little bit, and then maybe we would have entered here. Look at this. And would have taken a loss, right? And we are dissatisfied. Yeah, okay. Can always be working. Okay, that's many. As you can see, this indicator keeps drawing them every time there's an engulfing candle, and then it does it. Let's see. This is the one that we took. And we took it, and then price actually reverted on us. Well, I was going through and I did some backtest. Okay, let me go back to where we were. I don't know where I was anymore with the chart I drew for you. Oh no, where was it? Breaker. There's a breaker here. We lost it. Where's my chart? Where's my drawing? Oh, this is sad. All right, lifting off the candle. There you go. Sorry. There you go. Yeah. All right. Okay. So that's the model. That's the model. I publish the stats on Twitter. There's some tweaks and some extra refinement I want to do on those. More to come. Indicator is basically ready. I want to do some refinement, add alerts, and make it working with multiple time frames, so we can check the 15-minute engulfing candles maybe, and that's what I'm thinking. I wanted to, wait a second, make my camera a little bit bigger. All right. Hope you found this interesting. Test it out. You don't need an indicator for this. Just look for engulfing candles on the Harley and drop down to lower time frame and see if you like it. I'm going to be refining a little bit. Possibly this indicator will be in the bundle that we will release when we get to 1,000 subs on YouTube. Thank you very much for watching. Let me know if you enjoyed this new indicator. I need to find a catchy title. If you have a suggestion, let me know. And music. Yeah. Let's go. How do you do? Okay. We did it. I will see you soon. Ciao.